The federal government has borrowed 17.36 trillion naira from domestic and foreign sources in the first 10 months of this year. This represents 6.06 trillion naira, that is 55.6%, in excess of 10.9 trillion naira stipulated in 2025 Appropriation Act on 10-month probate basis. The total borrowing for 2025 approved budget is 13.08 trillion naira for the entire fiscal year. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. The breakdown of the borrowing so far shows 15.8 trillion naira from domestic sources as at October 2025 and 1.56 trillion naira from the external sources as at half of the year. Meanwhile, the federal government last week initiated a move to borrow $2.35 billion, that is 3.384 trillion naira via the Eurobond issuance. This will increase the total borrowing to 20.74 trillion naira. Also, going by the periodic domestic borrowing template operated this year, the estimated total borrowing for the year is put at nearly 23 trillion naira, bringing total excess borrowing for the year to about 10 trillion naira, that is 80% in excess of the amount of the Appropriation Act 2025. Financial analyst warns that the persistent overshoot amid weak revenue performance heighten the risk of a self-reinforcing debt trap, erodes foreign investors' confidence, and threatening private sector access to credit, with knock-on effects on business expansion, job creation, and general cost of living. The federal government in the Appropriation Act 2025 projected 54.99 trillion naira expenditure and 41.91 trillion naira. This resulted in deficit of 13.08 trillion naira, which is also to be financed through domestic and external borrowing. Based on this, the borrowing target for the first 10 months was 10.9 trillion naira, equivalent to 1.09 trillion naira monthly. However, data from the Debt Management Office (DMO) and the Central Bank of Nigeria shows that the federal government borrowed 15.8 trillion naira from domestic investors from January to October through monthly FGN bond auction, FGN saving bond, and Sukuk bond, as well as treasury bills. Financial analysts pointed out that by overshooting its borrowing targets amid rising revenue, the federal government is continuing with fiscal indiscipline, which marked the immediate past fiscal regime under the late President Muhammadu Buhari. They also say this development poses threats to private sector access to credit and economic growth and debt sustainability efforts. The expert also warns that federal government excess borrowing undermines IMF-backed fiscal consolidation efforts. The breakdown of the federal government's borrowing so far this year shows that it's borrowed 11.43 trillion naira in 10 months of 2025 through treasury bills, which is the primary market auction, representing a 4.6% year-on-year increase from 10.925 trillion naira in 10 months of 2024. The federal government, however, reduced its borrowing through FGN bond by 22% year-on-year to 4.042 trillion naira in 10 months from 5.15 trillion naira in 10 months of 2024. But borrowing through the FGN bond, saving bond auction rose by 5.6% year-on-year to 40.19 billion naira in 10 months from 38.06 billion naira in 10 months of 2024. Similarly, the federal government raised its borrowing through Sukuk bond issuance to 300 billion naira in 10 months of 2025 from zero issuance in 10 months of 2024. But borrowing through the FGN saving bond auction rose by 5.6% year-on-year to 40.19 billion naira in 10 months of 2025 from 38.06 billion naira in 10 months of 2024. Similarly, FG raised its borrowing through Sukuk bond issuance to 300 billion naira in 10 months from zero issuance in 10 months of 2024. Nigerian gross profit from crude oil and gas sales plunged by 824.66 billion naira in 2024, despite a rebound in oil production figures from the latest budget implementation report for the fourth quarter of 2024 released by the Budget Office of the Federation. Data from the report reveals that the gross profit from crude and gas sales fell to 1.08 trillion naira during the year from 1.90 trillion naira in 2023, representing 43.32% decline. The 2024 performance was 26.3% below the government budget target of 1.46 trillion naira, underscoring the persistence of weak fiscal inflow from the petroleum sector despite policy reform aimed at boosting revenue. The data indicates that the total oil and gas revenue before deductions stood at 15.07 trillion naira in 2024 against a budget of 19.99 trillion naira. This means that actual inflow fell short of the budget by 4.93 trillion naira, that is 24.65%, compared with the previous year total of 8.36 trillion naira. However, oil and gas inflow almost doubled, shows an 80.33% improvement. It is observed that the year-on-year increase was largely driven by stronger receipts from royalties, penalties, and exchange rate gains following the unification of the naira rather than from higher crude export volumes. The quarterly pattern shows that oil receipts rose from 3.35 trillion naira in the first quarter to 3.91 trillion naira in the fourth quarter, but remained consistently below the projected quarterly average of 4.99 trillion naira. This underperformance reflects both lower than expected realized prices and production shortfall relative to budget assumption. Nigerian crude output fluctuated between 1.4 and 1.6 million barrels per day, below the 1.78 million barrels per day targets used in 2024 budget. Despite being the country's traditional fiscal anchor, gross profit from crude oil and gas sales accounted for only about 8% of total oil and gas revenue in 2024. Highlighting the structural shift in government earning towards taxes, royalties, and penalties, the Petroleum Profit Tax and Company Income Tax on gas operation brought in 6.00 trillion naira, representing nearly 40% of oil inflow, while oil and gas royalty alone generated 6.99 trillion naira, an increase of 179.74% compared with 2.50 trillion naira in 2023. Officials attributed this rise to improved compliance monitoring and conversion of marginal fields and assets under the Petroleum Act industry. Other revenue streams also performed strongly. Gas flaring penalties yield 391.26 billion naira, up from 178% from 140.54 billion naira in 2023. Even though the budget had made no provision for this category, incidentally, oil revenue from royalty recovery and marginal field settlement climbed to 347.75 billion naira from 155.99 billion naira a year earlier, a growth of 122.93%, while miscellaneous income, mainly from pipeline fees, increased to 32.2 billion naira from 16.38 billion naira. One of the most significant contributors to the apparent growth in the oil and gas revenue was the exchange rate gain, which soared by 4.24 trillion naira in 2024 from 791.88 billion naira in 2023, an increase of overflow of 435%. The surge followed the naira's steep depreciation after exchange rate liberation, which inflated dollars-dominated oil earning when converted into local currency. After accounting for all deduction, net oil revenue for 2024 stood at 12.95 trillion naira against a budget target of 16.98 trillion naira, a difference of 4.03 trillion naira, that is 23.74%. When compared with the 4.82 trillion naira realized in 2023, the 2024 outcome represents a 168.83% increase. While the figure appears positive on paper, it is observed that much of the gains came from exchange rate effects rather than improved operational performance or higher crude proceeds. Nigerian crude oil production inched up in 2024 with data from the Nigerian Upstream Petroleum Regulatory Commission showing that output rose to 442.21 million barrels compared with 392.66 million barrels in 2023. The increase of 49.55 million barrels, that is 12.62%, marked a modest recovery in upstream performance following 3 years of volatility and output disruption. On a daily average basis, Nigeria pumped about 1.43 million barrels per day in 2024, up from 1.27 million barrels per day the previous year. The gradual improvement reflected reduced vandalism along major crude evacuation corridors, improved coordination among joint ventures partners, and incremental barrels from the marginal field operators licensed under the Petroleum Industry Act. Monthly data shows that production stabilized after second quarter. Average output slipped briefly to 1.29 million barrels per day in April 2024, when several terminals underwent maintenance, but recovered to 1.49 million barrels per day in December. The highest level of the year-end figure was 12% higher than December 2023's 1.33 million barrels per day, signaling a firmer footing heading into 2025. Total liquid comprising crude oil and condensate amounted to 492.34 million barrels per day in 2024, compared with 451.09 million barrels per day in 2023, translating to 9.14% increase. Crude oil made up of roughly 89.8% of total liquid, while condensate contributed the remaining of 10.2%. The condensate share slipped slightly from 2023, underscoring that the recovery was driven mainly by higher crude throughput rather than the condensate output. Despite the increase, Nigeria output still lagged its fiscal target of 1.78 million barrels per day, reflecting lingering infrastructure constraints, under-investment, and crude theft. The shortfall means that the actual production achieved only about 80% of the government projection. A key reason oil revenue inflow missed the 2024 budget despite nominal gain from the exchange rate revaluation. The Managing Director and Chief Executive of the Nigerian Insurance Corporation, Thompson Oludare, Sunday has declared that a new era of accountability has begun in Nigeria banking sector, following the enactment of the stronger laws empowering the corporation to effectively prosecute those responsible for bank failure. Sunday made this known when he received the President and Chairman of the Council of Business Recovery and Insolvency Practitioners Association of Nigeria, Chimezie Victor, and members of his council during a courtesy visit in NDIC headquarters in Abuja. According to him, the NDIC Act number 30 of 2023, alongside the Bank and Other Financial Institution Act 2020, has significantly strengthened the corporation's power to liquidate failed insured institution and hold culpable individuals accountable. He explained that the new legal framework has transformed the operational landscape of the NDIC, enabling it to recover more assets from failed banks and return value to depositors. According to him, individuals who once evaded justice are now approaching the corporation for out-of-court settlement, recognizing the nose is tightening around those responsible for bank collapses. Sunday expressed appreciation to National Assembly for addressing the long-standing gap that had limited the corporation activities. He also commended the judiciary for its growing expertise in deposit insurance matters, as seen in recent judgment that brought relief to the depositor. Highlighting the impact of the new law, the NDIC board cited corporation's success in realizing sufficient assets to declare the first round of liquidation dividend to uninsured depositors of the defunct Heritage Bank Limited within 1 year of its license revocation, a feat he described as unprecedented in Nigeria's banking history. He assured that the corporation will continue to leverage the strengthening legal framework while deepening collaboration with BRIPAN and other stakeholders to promote financial system stability and depositors' protection. In his remark, BRIPAN President Chimezie Victor commended the NDIC for its leadership in strengthening Nigeria's resolution framework for failed banks. He says BRIPAN had made significant progress in harmonizing insolvency and business recovery laws, thereby enhancing the country's overall insolvency practice. He called for greater collaboration among regulators, practitioners, and policymakers to entrench accountability, promote business recovery, and sustain public confidence in financial system. Decline in retail demand has triggered a 17% month-on-month fall in consumers' credit to 3.54 trillion naira in July 2025 from 4.27 trillion naira as at June 2024. According to the breakdown in July 2025 economic report of the Central Bank of Nigeria, the consumer credit was made up of 950 billion naira loan and 2.59 trillion naira personal loan. Further details shows that retail loan fell by 51.5% month-on-month to 950 billion naira from 1.96 trillion naira in June, reflecting consumers' low appetite for credit due to high interest rates. According to the Central Bank's July Consumers Expectation Survey report, a higher percentage of respondents is 40.6% observed a rise in the interest rate on bank loan over the past 3 months. CBN further stated that fewer respondents with 34.4%, however, anticipated a rise in interest rate in the next 3 months. Personal loan grew by 12.12% month-on-month to 2.59 trillion naira in July from 2.31 trillion naira in June 2025. Consumer credit had increased by 6.48% to 4.27 trillion naira in second quarter of 2025 from 4.01 trillion naira in the first quarter of 2025. CBN latest monthly economic report stated that the decrease in the consumer's credit was driven by 51.53% decline in retail loan, which offset 12.21% increase in the personal loan. Disaggregated data shows that personal loans stood at 2.59 trillion naira, accounting for 73.16% of the total, while the retail loan at 0.95 trillion naira accounted for the balance. The dominance of the personal loan over retail loan over time reflected steady household demand for liquidity. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point on Global Television, where we extract the Nigerian economy and the government's policies. Before we call it a wrap, let's take a quick look at the stock market. The Nigerian exchange ended trading last week on a weaker note, extending the bearish trend as investors continue to profit-taking and cautious repositioning across major sectors. The negative performance, according to the analysts, reflected renewed sell pressure across banking, consumer goods, and industry goods sector as investors reacted to mixed earning results and tight liquidity condition in the broader economy. A review of the market performance shows that about 2.8 trillion naira was lost in equity markets, specifically the market capitalization, which represents the total value of shares on the NGX declined to 94.998 trillion naira from 97.83 trillion naira in the previous week. In the same vein, another major performance indicator, NGX All Share Index, nosedive by 3.5% to close at 149,524.81 points from 154,826.45 points the previous week. Meanwhile, a total turnover of 3.575 billion shares worth 107.001 billion naira in 146,429 deals was traded last week by investors on the floor of the Nigerian Stock Exchange. All right, this is where we call it a wrap on Business Point today. Join me again tomorrow on Global Television Channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms as Global TV NG. Up next now is Social Balls. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.